This conference will now be recorded.
Okay, so in the previous session, we were working on the interest calculation. Although we customized everything, but we could not, uh, come to conclusion how it was calculating. So today we will finish it first, how it will understand, and then we will start with the new topic afterwards. So let us, the go to quickly the customization what we have done, and then based on that we will see how to calculate the interest for the security deposit and then also on the overdue item. Now in the case of the security deposit interest, we have seen there is a main transaction, sub transaction, and also the interest calculation is actually done through the interest calculation reference rate, and for the rate we maintain what is the percentage rate applied, and then you define a calculation key, which is called interest key. In the interest key we maintain the calculation rule actually. So if you go to financial accounting new, go to contract accounts receivable and payable, go to business transactions, and then go to interest calculation, item interest calculation, define the reference interest rates. So we define two reference interest rate. One is Z5 and another is Z50 as interest, uh, and Z51 we have defined. One is the security deposit interest Z50, and open items overdue we are calculating with Z51. And for each one of them we define the rate of percentage rate what should be used. So for Z50 we have defined 10%, Z51 also 10%. That's the rate of interest. But how this 10% will be applied is done through calculation rule. Define the interest calculation rule. So here we have defined Z50 as a SG interest calculation rule. And if you see the detail, we're given the interest calculation method 3 act by 365. So basically here the logic is we are maintaining the percentage rate of calculation 10%, but how it will be calculated. So in the case of security deposit, what is the amount on which you are going to calculate the security deposit, and then into the number of days for which interest should be calculated. Here it is going to be actual number of calendar days, number of calendar days divided by 365. Okay, because our interest is for 1 year. Okay, 365 days. So number of calendar days, that means the exact number of days between two dates. Okay, between two dates, that means suppose security deposit is active from 0 to 01 2019 till we have closed yesterday security deposit. That means 29th of December 2019. Totally how many number of days happening here plus 1 day, including the day of conclusion. So these days will be there, divided by 365 into what you call the uh, the rate of percentage, that is 10% divided by 100. Now based on this interest is calculated. Okay, and on this interest calculated it will add tax also. Okay, because security deposit is like a FD, fixed deposit. Whenever you maintain a fixed deposit in a bank, the tax is applicable. Okay, so how much is the tax we have to pay? So that tax is also added and then posted to the contract account as a interest amount credited. Okay, so in this case basically interest plus tax both will be calculated, and that amount will be actually credited to contract account, so you can pay back the security deposit amount to consumer along with the tax. But in the case of open item, slightly differently tax will calculate. We will see how it will happen. So here this is the logic. Okay, and if you see the help file, it is giving that particular logic here. So if you go to F1, so here calculation basis percentage rate 1 by 100, percentage by 100, days by daily basis. Okay, calculation basis is basically what is the amount which you're going to calculate. That means security deposit amount is a calculation basis, 10,000 into 10% by 100, 10 by 100 into days divided by daily basis. Our daily basis here fixed here as 365. Okay, that's the only logic. And then come back, select the time dependent, select the time dependent interest conditions. Interest conditions can be credit or debit. In the second deposit, it is amount what you're crediting to contract account. So it is interest credited. Time dependent interest terms you're giving from 1st of January 2018. The reference rate is Z50. Okay. So whatever is the percentage you define for Z50, we can apply for the calculation. Okay. And then when the interest calculation happens, how the posting will happen. So for that, we have got the basic functions. If you go to postings and documents and see the document, maintain document assignments, maintain main transaction. So 0025 is the interest for the cash security deposit. Okay, that means security deposit interest when you calculate, it is called cash security deposit. Then main transaction will be 0025, for which you have got the sub transactions. For 2510, interest for the cash security deposit, carry forward interest on the cash deposit. Okay, so we will see both how they will work, 10 and 20, but interest on the open item is different, that we will see separately. Okay, so first what we'll do, we'll define one cash security deposit, and then we will receive the incoming payment. Then we will say security deposit is starting from 1st of January, and then we will say you are closing on yesterday's date, 29th, and for that how much is the interest amount you have to pay. Okay, so let me create one new contract account. Let me find out what is available, because there are some open items already created for other items. So I would like to keep it fresh. So 555 is the company code. 226 you can use business partner, and 5101. So 226 is a business partner, and we'll use 226. So go to CAA1. 226 is a business partner. Our account category is 50, and we'll find out one of the reference contract account based on the business partner 226. So let us select 5008 and then continue. Reference reference contract account 50. Ours is 50, and contract account will find out from the company code group 555 5101. So account holder Z500 Z500, and interest key here, whatever you maintain, it is for interest on the open due items. Security deposit will enter in the security deposit itself, the key, and payment terms is immediately household, account determination ID, and all this data is available. Company code and Dunning and correspondence Z5, will save it. So we have created one new contract account 6201. Now for 6201, let me create one security deposit. Go to contract account receivable and payable account, go to security deposit and then enter. Contract account is 6201, cash security deposit, continue. And then reason for the request is new customer, amount is 10,000 rupees. Interest key, here we have to maintain cash security deposit request, that is Z5. And starting date is coming from 01/01/2019. So automatically it will say return date is 01/01/2020. That means based on the starting date, it will automatically find out the return date. So I'm preparing a security deposit for 6201. Reason for request is a new customer, amount, interest key, and the starting date to end date, and then we will save it. So when you prepare the security deposit, it will create one, document, which is a statistical document. So if you go to change and then see, it has posted one figure document 10267. 10267 is a statistical document what is posted. But based on this open item, which is statistical open item, we can enter the incoming payment for the security deposit. So we will enter security deposit. Go to FPCD. Company code is 555 and document date is 01/01/2019. Posting date 01/01/2019. Value date 2019. So from the date of receiving the payment, actually the security deposit will start. So 1st of January 2019, 1st of January, and reconciliation key, we will use some number and then currency INR. And our contract account is 6201. 6201, enter. Select the items. So we have got one item 10,000, that is the security deposit amount. We will enter 10,000 rupees. This will be like a down payment. It is going to be kept as security deposit. Now post. So now if you see, go to FPL9, open items, 6201, all items. Over here you can see first we posted 10,267 as a figure document, statistical debit entry 10,000. Now incoming payment came as 91035, but actually that amount is reflected as down payment account. So cash security deposit deposits 10,000. It's an open credit which is available. Okay. Now we are returning this security deposit with yesterday's date, so that we can pay the amount back to consumer, and you can also calculate the interest amount on that. So go to security deposit change mode. Here you can see it is already received, paid, and the amount is received. Starting date is 01/01 and the document is paid 10,067. It is paid, status is paid. Now we want to release it. So go to change and then we want to return date, we want to make it as 29th of December. Today is 29th of December 2019, and then release. We are releasing the full amount. So release the security deposit. Now on this we are going to calculate the interest. So document date is today and reconciliation key KL001, business partner, contract, company code, but the contract account is very important. So 6201 and currency INR. Interest calculation is up to today. Actually, this is a posting date actually. We cannot make it as 29th because it cannot be posted that way. Contract account 5201. Okay, this is not 5201, it is 6201. And then continue. Line items. We are calculating interest up to 29, but we are posting today line items. So here you can see net due date is on 30/12. Okay, this is the line item for 10,000. So now we will select the particular line item, calculate the interest. Okay. So now interest has been calculated 1096, 1090, 96. Display the interest. The interest is coming from 2nd of January to 29th of December. Actually, amount is coming to 991.78 plus tax included 1096. So how this amount is calculated, we want to find out. So first we have to find out what is the number of days. Okay, number of days between two dates. So it is from 0 to and then January 01 up to 2019 to 29th of December 2019, include the end date calculation. It's coming to 362 days, okay, from 2nd of January to 29th of January, 29th of December, 362 days. So our value should be 10,000 rupees, that is security deposit, into 362 divided by 365 into 10% divided by 100. Okay. So let us see how much it will come to. So 10,000 security deposit into 362 divided by 365 into 10 divided by 100. It's coming to 991.780. So 991.780. It is calculating 991.80, same as our equation 991.78. Okay. On 991.78, 10% is the tax. So if you add 10%, it comes to 1090.95. That is the amount 1090.95. So now we will save it. That means the interest is calculated for the starting date from 2nd to release date 29th, and it is calculated using the basis as security deposit amount 10,000 into the actual number of days, what we found out calendar number of days, divided by 365 into the rate of percentage 10% divided by 100, and then on that it has calculated the interest tax also. So the total amount is credited to content account. So now if you go to FPL9 and if you see all the items, we can see 10,906.96 is a credit entry, that is for the interest, and 10,000 is the security deposit, that is open credit. Now down payment has been removed because you already made into a cleared payment. It is cleared because we have closed the security deposit, and this amount is now basically what you call due. Okay, 11,096 is the open credit value, which you can adjust with any open item, or you can do account maintenance. Okay, so this is how we are calculating the security deposit. Okay, but now we will do a open item calculation, how it will calculate. The key is different, but the rate of percentage is same only. Okay, and calculation is also same. So if we see in the configuration, we have used same percentage is not changing, but we have to define a different key. So go to financial accounting, new, contract accounts payable and payable, and then business transactions, and then interest calculation, item interest calculation, and then define the reference interest rate. That is Z6, Z51 we have defined. And for Z51, we have defined the corresponding, calculation rule. So percentage rate is 10%, define interest calculation rule. For Z51, we have given same to actual by 360. This also will make it as 365. Okay, 3 at 365, and then save it. That means actual number of calendar days divided by 365. Okay, and then interest conditions, it's a debit entry, time dependent interest, Z51, that is 10%. Okay, and then save it. And then here in the main transaction, sub transaction, we have got the corresponding, main and sub transaction. So we have already got the assignment to company code, and account determination also we have done. Okay, so main transactions are going to be 40 interest, and for 40 we have got various sub transactions, that is 10, 20, 30, 40, 50, 60, depending on different types of calculation. open item for the debit entry and open item for the credit item, installment plan. In all these cases, there are open items and we are going to calculate the interest. But here we are interested at the moment only debit items. The interest on the credit item also will come. Suppose we have got some excess amount paid by the customer, we are not refunded, okay? Then we are calculating interest on the open credit. That means that amount has to be credited to contract account. But here invoice means open debit items, okay? So now what we'll do, we'll create some line items and then see how we will calculate the interest amount. Now, although you got n number of line items, you can calculate interest on any given date. Interest will be calculated on each open item and then it will add up together and then it will say this is the total interest what consumer has to pay. Okay. So first we'll create two open items and then we will post it. Go to FPE1. The first document I'm preparing, posting on 01/01/2019. The posting date is 01/01/2019. Document type is 50. Reconciliation key KL001. And then company code is 555. BP item is Z50 or 50. And then open item. The contract account what you're using is 6201. 6201. Main transaction 5000. 5001. Here the amount is coming as, let us say, 5,000 rupees. But this 5,000 is actually amount included the tax. So 4545.45 is the amount. Okay. So one amount is 4545. Okay. Because interest will be calculated on the net value only. Okay. So it is 4545. So first open item, what you're creating, there will be document number, but the net value is coming to 4545.45. Now we'll save it. Now we'll make one more posting on 05/02/2019. 05/02/2019. Same reconciliation key. And then company code, everything remaining same. Open item. Contract account 6201 0500 5000. Let us say 5002. 6,000 rupees. Here the net value is coming to 5454. Second open item. And then save it. So we have got two open items now here. If you go to FPL9 and see only open items, we got to open credit for these two. We will forget for time being. 10,000 security deposit. This is the interest. One is 5,000 rupees. That is from 02/01, and this is due from 05/02. Now, actually posted FICA document on 1st of January, but it's showing due date as 2nd. Why? Because the 1st of January is supposed to be a factory calendar holiday. Okay. So in our payment terms, we have given whenever the factory calendar days are there, you should push the due date to the next date. That's why 02. But another FICA document what you posted was on 5th of February. Okay. And it's a working day. So that's why the due item is there available from the 5th itself. Okay. So 05/02 and 02/01. Respective amounts are 5,000 and 6,000. Now, suppose we want to calculate interest as on today, what is the interest amount? Okay. So we want to debit the consumer. Okay. Actually, it is monthly calculated, but since you didn't calculate and did not pay, we will say we are calculating interest on today's date. Now to calculate the interest, we must have the what you call interest key maintained, without which it can calculate. In security deposit, we entered Z5, but for open item, it is Z6. This is most important. We should maintain. Now we'll go to contract account, and then we go to the account, go to interest calculation post. That means first we are calculating. Document date is today's date. Interest calculation up to 29/12/2019. Okay. And then document date is today. Document type is GB. Statistical key is there. Reconciliation key KL001. And the contract account is 6201. Company code is this, INR. Then go to line items. Now here we are selecting line items. Actually here we are saying debit items, all items, or you can also select the open items. So document date is 30, KL001, 6201, calculation up to this line items. Now for both the line items, I'm calculating the interest. Okay. So interest will be calculated on both the items. Okay. But due dates are different. So here you can see the basis is the net value, not the total invoice value, not the total FICA document value. So whatever is the net value we have calculated, 4545, 5454, those amounts are taken into consideration. Calculate the interest and then display the interest. Okay. So it is calculating individually the tax amounts. That is basically 449 here and 488. Okay. So how these amounts are calculated? The first item is starting from 3rd to 29th. So we will say here number of days between two dates. So here our first calculation is happening for 3rd of January to 29th of December. Third of January 2019 up to 29th of December 2019. Include the date and then calculate. So this is coming to 361 days. Okay. So this is for 361 days. And the second open item is calculated from 6th of February, okay, up to 29th. So here we'll say 06, 01, 2019 up to 29/12, okay. So 6th of January to 29th of December, including one day, calculate duration. It's coming to 358 days, okay, 350 days. So basically one calculation is for 361 days and one is for 358. 358 days. This is not 6th of January. That's why I was wondering why only 3 days difference. It is from February actually, okay? Because as you can see, it is from February. So it cannot be just 3 days difference. So 6th of February 2019 up to 29 December 2019, calculate the duration. It's coming to 327 days. This is for 327 days. Now we will calculate interest for each item. So first item will be 4545.45 into 361 divided by 365 into 10% tax. 10% is the interest amount divided by 100. It comes to 449. Okay. So it is showing 449.56. Okay. And the second is coming as basically 5454.55. So 5454.55 into 327 divided by 365 into 10% tax, 10% interest divided by 100. It comes to 488.667. So 480.67. So both put together, it's coming to 938.23. But here there is no interest. Okay, we are charging this as a debit entry. Only on the second deposit, interest is applicable. Here is not applicable, tax is not applicable. So the total amount what consumer has to pay over and above the due item is 938.23. So now we will save it. When you save it, it will post a statistical item. Okay, post the interest. The interest document 80011 is posted. 80011. So if you go and see the open item, it will not reflect, but only when you see all items, it will reflect. So if you go to FPL9 and if you see open item, it is not showing the interest amount here, okay, because that is a statistical item. So if you go to all the items and then check it, here it will show the interest amount also 938.23. Okay, so that means consumer has to pay 5,000 rupees, 6,000 rupees plus 938.23, the total amount they have to pay. So this is how actually now it is balancing because of the open items available for the debit also, open items for credit also. So now we can do the account maintenance so that the net balance what customer has to pay will be 847.27. Okay. So now we can do the account maintenance. Maintain contract account is 6201 and then create a proposal. Continue. So now it will balance the debit items with the credit items. Okay. So 1096.96 is the interest on the second deposit, 10,000 open credit, and then debit items are 5,000, 6,000 plus 938. So out of 10,000, 1096 put together, it is clearing 6,000 rupees, 5,000 rupees. Balance amount is adjusted with the 938.23. So that is a difference what consumer has to pay as the total debit entry. So if you go to again account balance and then see all open items, it will not show any open item because the another item is second deposit. So it is basically is interest on the open item. So it will select all items. Then it will show the difference as 847.27. Actually, why it is not showing as open item? Because this 1090.96, sorry, this interest amount what we calculated 938 or something, that was a statistical item. That's why it's not reflected in the open item, but this is amount. If the customer pays this amount, then the account balance will be 0. So if we go to EFP CD, company code, and then contract account, payment is coming today, 30/12/2019, reconciliation key KL001. And then if you see select the items, this is the only item pending. Okay. So 847.27 and then post. Now, if you go to FPL9, there will not be any open item. And in any case, open item was not there because it was a statistical item. But we select all items, it will show everything is adjusted, balance is 0. Okay. So all the open items have been cleared and the balance is 0. So we have seen interest calculation in both. So the basic logic is same. What is the basis on which you're calculating interest amount? Into the number of days, calendar days divided by 365 into rate of interest. But suppose if you say basis as 360, then it will be 2 act 360, which means number of days actual divided by 360 into percentage. So the number of calendar days is fixed, but only the basis will change. Okay. So this is the logic. So last time we could not interpret correctly because the second deposit interest was coming, which you ignored. And in the case of interest calculation, it is also considering the same logic, number of days. Okay. So interest, you have seen both how to do second deposit interest and the interest amount. Okay. Now moving forward, we will work on the another business transaction. Let us say the returns. Okay. So go to financial accounting new, contract accounts receivable and payable, basic transactions, and then go to returns, payments, automatic clearing, running returns. Okay. In the next activity, you will create the definitions required for processing the returns. Okay. What is return? The open item was cleared, but then we found that the return is not, the open item is not actually cleared because the check what consumer gave has been returned because of some technical reasons. Maybe the signature is not matching or date is incorrect, or let's say the amount is shortage in the account balance of the customer in the bank. Okay. There could be many reasons. Okay. So whenever you give a check, we enter the incoming payment through cash, the check clearing amount, and then the information is sent to the bank, and the bank will do the clearing. Okay. So basically, bank will do clearing with a third party, that is basically clearing agent, and then we come to know whether it has been cleared or not. And once the amount is cleared, it will be posted to the bank GL account. But then if we find that check has been returned, then what the bank will do, it will intimate to us that the check has been dishonored, but they will levy some charges. Okay. Because the processing they have done, and then they have to reprocess it to inform us, and then it is also a kind of a loss of revenue. So they are debiting certain amount to the company, utility company. So they can fix some kind of graduated scale. If the amount returned is equal to or less than 5,000, let's say 150 rupees is the charges we are going to levy. If it is 5,000 to 10,000, then it will be 300 rupees. If it is more than 10,000 up to 50,000, then it is 500. Okay. That means that amount is actually debited to our company's account. That means we have to pay the amount to the bank. Okay. But it is not our mistake, it's the customer's mistake. So that amount, whatever the bank is asking us to pay as the charges for the returns, we are going to levy it on to the consumer. Okay. So when the returns will happen, we enter the return, and then system will reopen the open document. Suppose earlier we have created an open document, it was cleared because of the incoming doc payment to the check. But now that we find the check has been returned, that amount what we cleared will reopen. Okay. So it will add the new open item. And then we can also give by how many days the consumer has to make the payment. A deferral date is going to be determined. By this date, you have to provide the amount. Okay. And then we are going to debit what is the charges levied by the bank. So depending on the scale, it will determine how much amount you have to debit to the consumer. Okay. So we will see step by step what are the configurations. First, you have to maintain configure returns reasons. Okay. Return reasons is bank reason, check return. Okay. Check return by the house bank. Okay. You can select any of them. Now here I have done ZP1 check returns. So bank returns, check returns, incoming checks, payment cards, check returns, outgoing. Okay. So we are saying check returns here, check return by the house bank. And then return activities. Deferral days is 3 days. Okay. What is the deferral days? It will put a new date for the payment. Number of days that receivable is deferred if return has occurred for the payment. Using the deferral days, the new deferral date for the receivable is calculated according to following formula. The new deferral date is document date of return when the return is posted, the deferral days. The deferral date is calculated in this way is set if it is after the due date for the net payment of the item. Okay. If 0 days are specified, no deferral date is determined. That means actual due date was, let us say, on 5th of January. Now deferral date will become with 3 days, 8th of January, something like that. The deferral date is calculated in this way if the date is set after due date of the net payment. So if the document is posted on 6th, plus 3, 9 days. 9th it will become the deferred date. That is what we are putting here, deferred days. And then item turning lock and all that we'll see separately. Past charges on, calculate graduated charge, post the charges statistically. Okay. Calculate graduated charge means depending on the amount what you are returning, okay, we will maintain a rate for the returns, okay, that will maintain in the return charges. Go to return charges. So we are giving here for 1000 up to 100 it is INR. So amount limit we are giving your 100 up to 100, it is 200 rupees, okay. And if it is return charges, if it is equal to or less than 5000, the return charges, it is going to be 200 rupees. Then if it is 10,000 above, we are putting it as 500 rupees, okay. That means you can maintain the charges over here, and then based on this the calculation will happen. Configure the return reasons. So we'll define a new entry. Return reason is Z50. House bank, if you want you can maintain or you can ignore. Return type is check returned. So if you press F4, checks returns, history name, check returned by the house bank. Save it. And then return activities, new entry. Company code is basically 555. Deferred days, 3 days. 3 days. Past charges on, calculate charges, post the charges statistically, and then save it. And then return charges, new entry. Amount limit you are giving here. If the amount returned is up to 2000, okay, 2000 rupees, currency INR, then graduated charge will be 100 rupees. And then save it. Then again new entry. If the amount limit is 5000, equal to between 2000 and 5000 rupees, currency INR, then it will be 200, 300 rupees, and then save it. And then again new entry. Amount limit is 10,000 and above. Okay, currency, it is going to be 700 rupees, and then save it. Like that you can maintain. Okay. Now we can also give one more last. Above 50,000 INR is going to be 2,000 rupees. Just I'm putting the value, testing purpose, save it. Automatic charge determination, new entry. Okay, this I'll explain separately. That means over and above the bank charges, you cannot, sometimes apart from the bank charges, the company also can levy some charges on the customer. Okay, that means two charges we are adding: the bank charges as debited to us, plus over and above the company is also debiting extra amount to the consumer for the returns. Okay, for that we have to maintain one more setting. First we'll do with the straight away this thing, and then we'll see how to calculate. Assign the return reasons to house bank. So what is our house bank? We will see. So 5000. This is our house bank, CURT. Now we have to see in the check clearing what house bank we have maintained. So accordingly, we'll maintain the control. So let me go to check clearing what we have maintained for lot as well as individual. Okay, house bank. So if you go to the financial accounting new, contract accounts receivable and payable, and then business transactions, payments, processing incoming and outgoing payments, cash desk, cash journal. Suppose you are maintaining the cash desk or cash journal, define the cash desk for the clearing account. So for 555, we have given the check payment as 11301. This is a GL account 113101. Let me copy. Same GL account you might have given for lot also. You have to maintain for the lot also anyway. So define master data. Define the default value for the check lot. Define the bank clearing account for the payment lot. So 555 for the check we have given 113301. This is for the check payment. 11301 we have added for check. But here the house bank we use is GIRO. This is a house bank DRE, GIRO. So DRE is used, and here we are given check deposit. Define clearing account for the check deposit, chart of account INT. So for company code 113301. So actually here we use the house bank as basically payment lot 555 11301. This is for check. So DRE GIRO. DRE GIRO. That is a bank and the account number. Okay. So now go to assign the reasons. So here we got 555 DRE house bank 01 RR return reasons 01 bank return reasons check return reason. Okay. Check written by house bank. So we have to maintain for Z50. This is our key. Okay. So we will remove these two, not required, or we will copy and later you can remove. So 555 house bank 01. What is this HB? House bank return reason. Okay. 01 anyway you're not using, but even if you're using, it will be Z50. Actually, that is not defined. This is Z50. This is the correct one actually. So this is not correct. Why? Because we are not having the data. We should have different reasons for that. So actually we have to remove it. So this we will delete. So if you go to the company code, that is 555 DB DRE 0101, this is not required, and DRE we have defined Z50. Maybe you can delete first all of this, and then these are all copied from, okay, 5553 is not ours. So actually these three are there. We are copied from 0001, that's why it is there. First you delete everything, save it. Now go to new entry. Our company code is 555 house bank. We'll set the house bank as DRE and then HB, that is a clearing reason. House bank return reason as 02 and it is Z50. It is Z50. Continue and then save it. Because we have maintained 02 as the return reasons. If we get 50, return reason is 202. Okay, check payment. So we have assigned the house bank along with the return reason. Okay, so 555 02 house bank DRE get 50 return reason. Now save it. Then define the bank clearing account for the returns. So just like returns, just to maintain reasons for the payment lot, we also have to maintain payment lot for returns. For that, there should be a account maintained. So it is already available here. We can check this thing. Bank clearing for the returns. You can see for returns it is there. Okay. So for 555, same 113301, what we have activated for the check payment. Okay. This is for the check payment. We also have to maintain the same GL account for the returns as well. Okay, returns we are not activated for 555. Only here you can see it is for returns is missing. Check we have maintained, payment card for cash we have maintained, and credit card we have maintained. Okay, so let me copy this line. Okay, DRE copy, and then we will say this is for returns. Returns continue. 558 target key must be different. Yeah, for the returns. Valid for check, valid for returns. Actually, you should maintain different GL account, I think. That's why it is not same GL account you cannot post. That's why it is. We'll try to do it. If it shows the same error, we'll define a new GL account. So for example, here in AAA for check, I've given 113108, 11308, but for the returns, I've defined one other GL account. So that GL account has to be different. So we'll define one new GL account with the same specification as 113100. We will copy this. We'll create one new GL account. This is a reference. And we are having 11301. We'll make it as 113305 returns. So we'll define one new GL account first. Go to FSP0. FSP0. And we want to define the GL account as 113305. 113305. In the chart of account, create with the reference. Reference GL account is 113100. 113100 maintained in the chart of account INT. So we'll make it as returns. And then returns. And then save it. Now we will maintain this for company code. Go to FS00, create with the reference, maintain for reference company code A. Control data, and then save it. So 113005, we will use it as returns clearing account. So we will select, currently this is the line item for the check. So we will select it, copy, and we'll enter the bank clearing account 113305, and then make it as valid for returns removed, and then continue, and then save it. So you have maintained the returns account. So if you go to returns, we must be able to see that as well there. Go to returns, define bank clearing account for the returns. So same screen is coming here. So for the returns, if you see 555, it's coming 113305. Then define clarification account for the returns. While clearing, suppose actually clearing is happening through basically returns. When you're entering, it's a lot entry. Okay, we cannot do single return, it has to be lot entry. But while entering the log entry, suppose you made a mistake, the contract account was entered wrongly or something, then it cannot clear. So what it will do, it will put it on the clarification account. From the clarification account, you can clarify and then repost. So we will maintain this GL account, copy, and then house bank, our company code is going to be 555, and our house bank is DRE. Okay, DRE, DRED, and then continue, and then serve it. Come back. Define charges for the charges account for the returns. So actually here, blank clearing charges and charging for the company, bank, a company also. That means whenever the return is processed, we can post two types of GL accounts, two types of accounts, two types of charges. One is a bank clearing, what has been charged on us. Bank is leaving some charges on us, which you are posting into contract account. And another is our own charge. Okay, so for the return type 02, return type 02 is check returns. So RD accounts are maintained here. Okay, how this will be used, we will see. Now there's no need to maintain. It is independent of the company. As long as these GL accounts are there in the company code, they will be posted. Okay. Define account assignment for new items with the returns not required. Define document type and clearing reason for the returns. Okay. Now document type is AB, that is a client level document. Clearing reason is 10. So for the clearing reason 10, we must maintain our clearing category and the clearing variant. Okay. So we will see that separately. So variant is SAP01. This is when you prepare a payment lot for the returns, the variant is SAP01. But we can also use our own specific. We can enter it there. That time we'll see. Field selection, returns, time dependent, not required. Okay. Now finally what we'll do, we will also go and maintain the clearing variant for the clearing category. So the account assignment for clearing, define document, clearing reason. Clearing reason is 10. Okay. So let's go to clearing reason 10 and then see what is the clearing variant you have to use. Okay. So go to the open item management. Go to open item management. Define clearing type. Define the specifications. Define default incoming payments. Payment lot. Cash as payment. Cash as payment. Let us see what is the clearing type first. Post manually, payment lot, payment on cash as payment, cash as payment, card distribute. So return type is there is no separate return type for the clearing returns. Partial bill, final billing, preventive, migration, credit, check lot, check cash as. Cash as payment, payment run, payment lot. So 05 is the actual clearing type. Post manually, account balance automatic clearing, payment lot, 05 the payment lot, payment run, cash desk, card, distribute, collective bill. So it is a lot actually. Lot means actually, I was thinking payment lot, payment run. Payment lot we are creating. We are also creating payment lot for the check lot. And then we are also creating payment lot for the credit card and payment lot for the payment order. So let me see when you prepare the payment lot is in a separate one. So go to contract accounts and payable, payments, payment lot. So there is a payment lot here, check lot is there, credit card lot is there, manual order lot, returns. Okay, returns payment lot, returns lot is FP09. So returns lot there should be separate clearing category, clearing reason, returns lot. Account maintenance, automatic clearing, payment lot, payment run, cash desk, payment by card, distribute, postal order, check lot, payment order lot. 10 is for clearing type, 10 is not there. Clearing reason. Okay, let's go to define specifications. So I think there's no separate here. It is coming from here only. Returns what you're maintaining. There they are maintaining clearing reason as 10. We will see. We should clear. So if we go to the business transactions, returns, define document type and the clearing reason. Document type is clearing reason 10. 10. Okay. Because clearing reason and clearing type are different actually. So let it be. We'll see how clearing will happen. Now, this is a basic configuration. Now, we have to create the open item. And then for open item, you have to enter the check payment. You can enter to the cash desk also. And then check is dishonored. So now we'll enter the return lot and then see how the return lot will be posted. So first we'll try to do tomorrow posting a open item, calculate the returns. And then after posting, we'll see it is posting the graduated scale, charges. That is only based on the bank charges. Later we'll modify, apart from the bank charges, we also want to add the additional charges by the company, how it has to determine. Okay. So both we'll see tomorrow. So tomorrow we'll continue with the actual returns process.
Yes,
Configuration is ready tomorrow. Yeah.
yes, sir.
Okay. Thank you.
Thank you, sir.